Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This technical analysis update is for Monday, November 23rd through Friday, November 27th, 2009. Well, folks, as we get into this In The Money Stocks Weekend Technical Analysis Update, I want to discuss quite a few things in regards to the market on a technical basis. There were some key levels that got hit last week. Last week was a stereotypical Options X week, and I want to discuss it because of that so you guys fully understand what to look for on Options X week. There was one difference in last week than a normal technical kind of options expiration week, and that would be the volume. The volume was very, very light last week, but overall you saw the whipsaw that you're used to seeing on an Options X week. Remember, the institutions who mostly sell the calls and the puts to individuals out there, the small investor and so forth, they want them to do whatever they can to close those options kind of in the basically at those strike prices where they expire worthless. They don't want to pay them off. They don't want to, have to, lose on the trade essentially or have their profits cut slightly. So what they're going to do is close certain stocks, especially the bigger names, at certain levels. And that really did happen, folks. And just to touch on, kind of to show you this analysis, take a look at Goldman Sachs. Goldman Sachs, what did it close at? Just so happened to sell off into the close. It closed at $70.01. So think of all the strike prices at $70 that basically expired worthless, whether they were puts, whether they were calls, at done, expired worthless. How about Apple Computer? Apple Computer closing at $199.92. So basically at $200 on the button. Don't think that there weren't a ton of strike prices, both puts and calls, at $200. They expire worthless. These are the games that are played with options when you hold into options expiration. So you must be aware of this. In addition, the normal options expiration week, as we always say it in themoneystocks.com to our premium subscribers, we talk about how the normal options X is a very whippy week. And this was exactly that, where the market rallied in the first portion of the week and then sold off in the last portion, basically closing flat on the week. And I want to show you that in terms of where you closed. All right, see this green trend line with the little white in it? That's the lower Great Wall of China. That's one of the key levels that basically alerted us at In The Money to certain key levels and allowed us to call the market so accurately over the last few weeks, just like we have for now multiple years since the company began. And as we accumulate a larger and larger following, that just continues to roll on out. So now notice this lower little white line. Watch where we opened the week, folks. Let's go all the way back to last Friday. This is last Friday, the 11th of November, and we closed right on that line. So you really closed right here at the tail. If you want to take a look, you closed right here, which is almost identical. Now, granted, interestingly enough, you can see this is where we closed last Friday, and this past Friday here, if we scan forward, you can see right below, follow that green-white line, we closed just below it. So you actually lost maybe about, 25 cents or so on the week in total on the SPY, but the SPY was insanely volatile. Take a look at Monday. Let's go back to last Monday. All right, right here, Monday, the market gapped up, and again, we'll show it to you here. So here's where we closed a week ago from Friday. We gapped up, had a big up day, then Tuesday followed with a pretty decent little up day, although it never took out the high of Monday, which was very significant. I'll discuss that in a minute on a technical basis. Wednesday was a flat day. Thursday, the market sold hard, and Friday, the market was down a little bit as well. So you can see net, the market really didn't move a whole lot last week, but what it was enough to whipsaw. Remember, institutions, and I said this at the beginning of the video, their goal is to whip out everyone they can from those option trades on Options X week, so that's why you get the up and then the down move, because you're really, on the up move, you're getting rid of those guys that have puts, and then on the down move, you're getting rid of the call buyers. Then in addition, they close those options directly on certain strike prices. Guys, and many of us out there, or at least the amateurs out there, those of you that are maybe beginning trading or understanding the markets, many of you will say to yourself, well, wow, I don't understand how they can do that. Well, guess what? Big money rules the markets. The faster you learn that, the faster you're going to save yourself a lot of coin. I promise you that, all right? Understand the games that are played. Understand what's in order, all right? Just think about all the money they make by closing Apple Computer at $200. Think about the puts and the calls on either side of that 200 strike price, and think about how much money in premiums they collect all over the market, whether it's a Goldman Sachs, whether it's a JPM, whether it's a Morgan Stanley, whoever it may be, the hedge funds, whatever it is, there's a concerted effort out there to do that. You got to understand the games that are played. If you don't, you are just giving your money away. That's what we do in the Research Center, folks. I can strongly recommend that you join that Research Center to get this information. All right. There's a reason why we've been able to call the market. For instance, check it out, guys. When we broke up on Monday, let's go back to Monday. Now, Friday we had a close. Now, we know the Great Wall of China. I've talked about that in previous videos for free, and we talked about it even in last weekend's video. We gapped above the Great Wall. You closed above. Many amateurs think that's a breakout, but we, on the other hand, told our premium subscribers, continue shorting this market. Short this market up here. I shorted here myself. I bought some SRS, bought some other plays when the market was up here near the highs, up near this level. Now, why? Well, because you didn't confirm it. And then on Tuesday, notice how you didn't close above that high. That means there's no confirmation on a daily close above the Great Wall of China, which again happens to be in this range. And I'll draw an X through the Great Wall of China. This is the Great Wall of China right here. This whitish green line to this one right here. So granted, you're trading above it. Many amateurs think to go long there. Oh, it's a breakout. It's a breakout above that level. We told our premium guys in the chat room, in the research center, don't believe it. It's not confirmed yet. Until it confirms, don't trust it. It's a game. All right, again, Wednesday comes, the market doesn't confirm again. Thursday comes, what happens? The markets get smacked down. All right, all of us that were shorting up in the highs all the way up here in the money beautifully, and again at the close on the SPY on Friday, which was down a little bit on the week here. Very, very nicely done. So again, it's just about learning the methodology, folks. It doesn't take a genius to learn it. I can promise you that. It takes a little bit of learning and a little bit of time, and you can do it all. You know, again, I started from where all you guys are starting, most of you guys anyways, not knowing a thing about the markets. And in just a matter of years, you know, so forth, getting a grasp on this stuff, it comes to you, and you become one of those profitable traders that can compete with the institutions. All right, maybe some of you guys won't be able to compete with them on the money side, but you can compete with them in understanding what they're doing, positioning yourself on the right side of the trade, on the right side of the market. That research center is so key, I can't even express, folks. The calls alone in it, you know, literally in 1 week's calls, you should be paying for 5 years of the research center, assuming it's a decent week, all right? I mean, that's just how easy it is. All right, so again, guys, what I want you to watch for next week, let's talk a little bit about this. Next week, look for this low. See this white and blue line? This is a key level. Notice how you came down to it right around 109, just above 109 on Thursday. On Friday, you could not break it. This would have confirmed it. If we had closed below this low, we would have put in a pivot high. Did not happen, so you have to respect this level right now going into next week. In addition, next week, guys, at Thursday, the markets are closed. Friday, half day, so it's going to be a light volume week. The fact that we did not confirm here either could tell us that we could have one of those sideways weeks unless we confirm earlier in the week. That's another thing that you need to join the Research Center chat room for, so you can be aware when we confirm. We'll let you know as soon as that does happen, and that'll tell us whether to expect upside or downside in the markets or relatively flat market. But again, watch this level at 109. Watch for a closing low below that line, and then we have to look for the confirmation, obviously, after that point. In addition, what I liked about this week is you closed back below the Great Wall of China. That's very important right here. Here's your Great Wall of China again on the chart. We were above it for 3 days, Monday, Tuesday, Wednesday, got back in the middle of it on Thursday and closed below it on Friday. Technically, that is significant, although again, with light volume next week, you have to be aware what that could mean. And again, that's why it's so imperative that you're involved in the methodology. And we teach this, folks. We don't just guide you. We're going to teach you how to fish. That's the key thing about it. All right, so again, a nice little pullback, but notice right into the necktie. Again, this is the level you're watching come Monday and Tuesday of next week, this 109 level for a closing low below. Otherwise, you're going to start to watch your levels. Up here will be the big level to watch, is the upper range of the Great Wall of China from around 110.34 all the way up to this level here at 110.50. Included in there is the 200 moving average. That will be a significant area. If you get above that, then you're going to look for gap fill all the way up here at around 111.30. And obviously, once we get above, we want to see if we confirm it on above, and then we have more ranges. But again, you want to watch the levels. The levels dictate exactly where you're going, folks. That's why we were able to short above the Great Wall and be so successful on the pullback late in the week, because we knew it didn't confirm. Watch your levels. Watch what confirms. If you can learn that, you can trade this market, right? If you can dodge a wrench, you can dodge a ball. Same thing with the market. If you can learn the markets, you can make money. Take care. Have a wonderful weekend, folks. Come join the Research Center. Come join the chat room. Join the next webinar on December 12th. You want to be involved in that. We'll talk to you soon. Take care.